Hello and welcome. You're watching NewsX with me, Devika Devan. After a stunning rally, we've now learned that silver prices for THE CX Silver March futures have crashed sharply, dropping by a huge rupees 21,000 per kilograms in just an hour of the afternoon trade. According to reports, the decline in silver prices has come after the white metal had rallied at a record high of rupees 2,54,174 earlier in the session. Globally, silver has seen heightened volatility, briefly crossing the $80 per ounce threshold for the first time before reversing course and sliding below $75. According to initial assessment, today's pullback was driven by profit taking and reports suggesting progress in discussions between US President Donald Trump and Ukrainian President Zelensky with regards to a possible peace agreement. The sharp correction also reflects a wider bout of profit booking across the bullion market, as easing geopolitical risks have dented safe haven demand. But what does this truly mean for investors and for entrepreneurs? I take that conversation forward with Dr. Sharad Kohli, senior economist, Navneet Damani, senior vice president and head of research commodities and currency at Motilal Oswal Financial Services, also with us. And last but not least, Professor Aman Agarwal, director of the Indian Institute of Finance. And I'm being told Mr. Yogendra Kapoor, economist and market expert, also with us on the broadcast. Let me begin with Dr. Sharad Kohli. Dr. Kohli, your thoughts and assessment on what has happened. Yes, we've seen a dip of 21,000 rupees, but the prices continue to still be relatively high.
Good evening, Devika, to you, my fellow panelists and NewsX viewers. That so happened while you were talking about the crash, because we track silver like silver fox. And as we speak right now, the prices have recovered. And there were two reasons why the silver prices went down yesterday, the crash of 21,000 rupees. One reason was that the price of gold and silver, they both originate from New York COMEX, which is commodity exchange, and the London bullion market. These are the two principal markets around the world, which basically determine the prices. We call that as price discovery. So the price discovery happens from there. And the rest of the world follows the trail, because there it's traded in ounce. We convert that to of course, silver is converted to kilos, and gold is converted to 10 grams or 100 grams, the minis, depending on which exchange you are trading with. If you're trading in MCX, you have the gold minis, the most popular of them all. And silver, of course, we have the kilo price. So what happened was that when you trade in derivative, for the benefit of NewsX viewers who are not aware of commodity exchange methodology and the process, there is a monthly contract. So it so happened that 29th of December was the monthly contract expiry at the MCX. So what happens, typically a trend, I think my friend Mr. Damani, since he trades in commodities, he would relate to this, that during a month when the prices have risen sharply, normally on the date of contract, there is always a profit booking. So there is a reverse trend which is seen on the day of expiry. And it's the other way around. Suppose a month has seen very depressed prices, because people do play long and short. Playing long and short basically means that you only trade in contracts. You're not physically exchanging gold and silver. You're only buying a contract at a particular price. So in a month where the prices remain depressed most of the month, you will see on the day of expiry prices recovered. So that was the reason why you saw that major correction. By the way, I would like to clarify here, Devika, that unfortunately or fortunately, I don't know how to put this down, that none of the Indian factors, we believe probably Dhanteras or Akshay Tritiya or the wedding season, very, very minute impact on gold and silver prices out of these happening. They are basically determined from international market. A lot of people believe that Dhanteras, it's going to become expensive, or wedding season, it's going to be, all that is crap. I mean, it's a difference of 200 to 400 rupees here and there. That too, that's an arbitrage between Jaipur, Delhi, Mumbai. You will have these differences basically. The second reason was, as you rightly said, there was some ray of hope that there might be a peace deal between Russia and Ukraine, because President Trump was pushing Zelensky hard. He called him to Florida at his resort. But then while the discussion was on, uh, President Putin came out with a statement that my house has been attacked by a drone. So I think the entire discussion went out of the window. It was tossed out of the window. So all the efforts of peace, well, that was big news. President Putin's house being attacked by a drone from Ukraine. He said, "I'm sorry, there can be no peace deal." So all that thing got reversed, and this is exactly what happened to the prices, Devika. As we talk right now, I have the chart in front of me because we track it like this is the way Mr. Damani must be tracking. I track it like a silver fox. The prices are back to coming to $76 per ounce. They went down to $71, $71. And now they have recovered almost, if the crash was 21,000, I would say about 12 to 13,000 has already recovered. Same goes for gold. It is getting closer to $4,400 for an ounce. So the prices have recovered. So these were the two main reasons. I think the undertone of both the metals, Devika, is still bullish, and central banks have bought gold, especially by tons in the future. So I think the best way for somebody who wants to track gold, and a lot of people ask me this question. I've been talking on gold and silver almost 2 hours a day for the last so many months now. The best way for someone to track the prices, Devika, is that you keep track of the factors which lead to a swing in the price. And then silver, of course, we know is an industrial commodity as well. Solar batteries, we've got AI data equipment, we've got electric vehicles. There is a demand. 50% of the silver just disappears into these equipments. It never comes back. And then China has been playing a game here as well. China has been hoarding silver. It has declared it as a rare metal. It's been stocking silver. It bought a lot of silver from London bullion market, and the price is slightly profitable. So they all sold their silver. So I think it's a very complicated game as far as gold and silver is concerned. But the best way is to track the reasons. So the best way would be as far as gold is concerned, although you're basically talking about silver, but both go hand in hand. So I don't mind mentioning here that when you find the central banks become sellers, I think that would be the time for a retail investor or people who are holding gold to probably go and sell. As far as silver is concerned, I think the long-term trend is still bullish. There is a shortage of silver. What it is said that silver that is produced in 9 minutes, which is mined in 9 minutes, gets consumed in 6 minutes, which means there is a lot of gap between demand and supply, which is leading to, but it's going to be highly volatile. So investors are advised caution and keep it for long term. Do it in smaller bits, Devika.
Okay, all right, Mr. Damani, bringing you into the conversation here as well. And today is, of course, a day when everyone really wants to hear the expert opinions on what's happening, because unfortunately, there's a slight correction or a slight dip, and there is some sort of a panic that gets created, because I've personally been hearing for the past 2 years a lot of people, let's call them fintech influencers, for the lack of a better word, have been asking people to really invest in silver. I've seen so many of those reels pop up on my social media and really wondering, what's going on and why is everyone pushing others to invest in silver. So I just want to understand from your perspective, because there will be some regulations by China that are going to be coming into force on the 1st of January 2026, when it will become slightly tougher to then start bringing in silver from China. And let's face it, they are currently the world's biggest producers. They may not be the number one in terms of mining, but they are currently the biggest producers. So given some of that friction now expected and coming in, what is your assessment on the future of silver as a commodity, and what is your recommendation to people who are looking to invest?
Well, we've seen a massive spurt in silver prices over the last 1 year, and year to date prices are up roughly around 175%. So silver typically is got a frenzy, and it's moving like a small cap stock or a stock which has got less of liquidity, less of supply, and too many people chasing it. And to top it up, there is a lot of financialization of assets which is happening in gold and silver at this point in time. As you rightly pointed, a lot of fin influencers or whatever you call them are talking about investment in silver in a very large fashion. But this typically has been the fad for the last 3 6 months. We at Motilal Oswal have been bullish on silver since the time it was 60,000 rupees, targeting about 1 lakh, then probably revised to 150. Eventually, we climaxed around 77, 78 to the dollar, or maybe 2,40,000 rupees, which was hit yesterday morning. Now, yesterday, what typically happened and what led to the fall is something that I would like to highlight. It's got nothing to do with expiry, pardon me for that. It's got nothing to do with what happens in the global framework, it is typically where China went on to increase margins for silver up to as high as 25%. And also, as you mentioned, the cap that they've introduced of uh, the silver free flow of material being capped from the 1st of January, so that the material which is coming out of China and which was going in, so out of China means they import a lot of raw silver, and they export a lot of refined silver in terms of various mechanisms. So if that stops coming out of China, it's going to be have a shortage in the market. Also, the fin influencer category has led to a lot of FOMO buying as well as ETF buying on the domestic front as well as the international front. iShare, which is the largest ETF globally, they have seen a 130% jump in silver ETF holding in the last 1 year. And on the domestic front, last year the AUM of was around 17,000 crore rupees. We stand tall at a roughly around 55,000 rupees as of yesterday. So that's a three and a half, threefold jump in the AUM of silver on the domestic front as well. Now, all this material which is bought by these so-called uh, fund managers or the ETF guys goes into vaults and storages. They don't. It doesn't come down into physical market. So in an already shortage market where silver has been struggling for the last 3 4 years, or the fifth successive year of shortage in the market, and this ETF buying kind of creates another round of dent in the market with the shortage, has led to prices running up so fast and so quickly. I would advise a bit of caution at this point in time. Our bias still continues to be positive from a 1 2 years perspective, but the recent run up of last 40 45% in a matter of last 40 45 trading days is something beyond imagination and is scaring not only us but a lot of industry participants as well. We would take it with a pinch of salt and advise that any major correction like the one we saw yesterday or the ones that can come in the near future could be an opportunity to add on tranches. So it is now become a SIP mode kind of a commodity. It shouldn't be going into all in at this point in time. Maybe if it corrects to 2 lakh 10,000 rupees or below that, one could look to start deploying reasonable quantum into silver up to as low as 1 lakh 80,000 rupees. Upside potential is clearly visible till 95 and $100 on the international front. And on the domestic front, the prices, assuming that rupee will be around 91 to the dollar, will be around 3 lakh 25, 3 lakh 30,000 rupees over the next 12 to 18 months.
Okay, all right. I want to bring in our other guests as well. Professor Aman Agarwal, I want to understand from your perspective, sir. What do you make of the price rise that we have seen recently and also the dip that we saw? And what is your assessment for 2026? Because ultimately, everyone's looking to the future.
You see, this dip was expected. I have spoken of this at All India in a couple of channels in the last 2 3 months. There is a year-end closing globally, which is done wherever the exposure is taken in metals, which has been rising steeply recently as an outfall of central bank, that is Reserve Bank of India, buying it, and the festive season being going on in India. There has been a tremendous rise both in gold and silver. And this was expected to happen in the December end because they would be profit booking, and companies who are actually trading in commodities from Europe or from the US, having offices in India, they would like to close their positions and book profits because Europe, in Asia, Europe, America, and a couple of other countries in Asia also have a year-end closing. That means January, December structure and not April, March structure as we have in India. So they need to close and show their books having good profits if they want to boost up their balance sheets. So that is one major reason. Secondly, silver's intake this particular year has increased substantially, not only in India, in certain other countries as well, primarily as an outside of usage of silver in chipset making. As you might have seen, Government of India in the last 2 years have been talking about chip structures, but major impacts of joint ventures coming from Asia and other parts have come into chip structures in India this particular year. And there has been extensive consumption of silver in chip structures for this particular, and that's why there has been a demand specifically for silver, not for gold, but for more for silver. This demand is expected to go up slightly in the next 2 months because we still have, wedding seasons. Whether we talk of any religion, anything you can talk of in India, between September till almost February end, are periods when almost all religions have festivities, marriages, and these commodities, which is including diamonds, gold, silver, any other precious metal, even platinum from that perspective, is something which people end up buying for these festive moments. And that's why we have seen tremendous rise, and we will still see some kind of stability going up. Henceforth, March going onwards, there would be a steep fall again. I'm expecting a steep fall tomorrow as well, both on both commodities, because of profit booking, which is expected to head as a year-end structure. Earlier, these profit bookings used to take place between 2 to 3 weeks in advance, primarily because money did not get transferred at a click of a button. But today's India's banking facilitates transfer of funds within few hours across nations, and not only with swift structures but otherwise this is made possible, which was not there possible before. And that's why we are seeing them booking these profits towards the end than booking these profits before.
Okay. I want to bring in Mr. Yogendra Kapoor as well. Mr. Kapoor, your thoughts and what is it that you can, your assessment that you can share with our viewers on this who are watching very keenly today, all news channels is, a lot of news around silver has come up. What are you expecting 2026 to look like, keeping in mind some of the global realities right now?
Right, Devika. First thing is that we need to understand that the silver prices, if we look at them, are they going to be sustainable? I mean, in terms of, if we look at 2026, how do we foresee? Do we foresee the rates going down or rates going up? My assessment is that the rates are going to go up, and I'll share the specific reasons for that. Now, what we are seeing is that in case of silver, the industrial demand, and let's look at the various industries where it is getting utilized. EV industry, solar panels, electronics. Now, these are those industries which we are witnessing that it's not only the urban demand, but also the rural demand that is catching up in India. We all know that India is a consumption-based economy. And here we find that, going forward, that you see, it's something which is making sense on the ground, in the sense that when we talk of EV, we see government is already promoting the EV concept in India, and it's making sense in terms of reducing the cost of doing business so far as the businesses are concerned. In case of consumers, it's ending up creating savings in their hands. So these are the specific reasons why I feel that the demand for them is going to continue to remain high in the coming time. And that's how I look at it.
Okay, Dr. Kohli, at the same time, what are the new entrepreneurship opportunities that are then going to open up in the next few decades as far as the use of silver is concerned? Of course, when we talk from an Indian context or Indian point of view, a major focus as far as gold and silver is concerned is also in jewelry. But we're looking at an EV boom, we're looking at a solar boom. We know that there's a lot of focus on solar in India now. And we also know that all of these industries use silver as a commodity. So in your perspective, what are you thinking and what is your advice to people who are probably looking to venture into now this side of business as well?
Well, Devika, an interesting aspect before I answer your question is for the viewers who are looking at us four economists sitting there on the panel. And there's a very interesting saying in America. When I was at Harvard, it used to say when there are four economists, there are five opinions. So I'm so glad that you've got different opinions coming out on the screen. And for the benefit of my fellow panelist who's from some broking company, I would like to inform him, because he said it's got nothing to do with contract. I'd like to inform him that one of our companies is trading in American COMEX. And what I shared about expiry of contract, booking of profits, well, the China factor is always there, but there was a correction. There was a heavy profit booking. People at COMEX had gone sharply long on silver during the entire month, and they booked profits because of the end of the year and end of the contract as well. Coming back to your question, yes, there are plenty of opportunities for startups. I think solar is being promoted under Pradhan Mantri, Surya Yojana, where solar is being installed on the rooftops of people, and they are being incentivized to install that solar system. So definitely silver is required, but I must also inform here, Devika, that because of shortage of silver and the game that China is now playing in hoarding silver and buying it from the European markets, uh, researchers are already working. Now, this might not be music for the ears of people who are expecting silver to keep going up astronomically forever. That there is already research going on to find alternates to silver, because if it is in short supply, I think China doesn't know this, that if it strangulates the supply altogether, then you will be compelling the companies, the manufacturers of solar, AI data equipment, and others to look for alternates. Well, there's always another innovation, another invention which is constantly on the mind, because when something is not in supply. So for the startups that you asked, Devika, I think those startups are already facing. I know some solar battery startups and solar system startups who are facing paucity of silver supplies. Silver is not easily available. In fact, you'll be surprised. For example, like we are sitting in Delhi NCR, there is a place called Chandni Chowk where most of the silver and gold trade is managed from. There's a place called Kucha Mahajani. If you go and ask for delivery of silver, you will not find it very easy to get it on spot market. That is, if you want to go and buy, let's say, 10 kilos of silver in raw form or whatever form, it's not going to be easy for you, or they're going to charge a very high premium if they arrange it for you. So I think supply of silver is already facing a shortage. So that's not music for the ears of startups. I think a startup which can find an alternate to silver to be used in these equipments, I think will be the one which will be the winner. But for now, I think government is promoting solar government, and we all know there are about 6 units of semiconductor already under installation. We might see the first production of semiconductor coming this year, very early. So that, of course, is an opportunity. There's an opportunity for MSMEs as well, who are around these semiconductor manufacturing, the chip manufacturing plants. They're going to benefit as well. AI data equipment, I see a lot of potential. Again, in AI, there are a lot of startups. At least I mentor 200 of them in the Silicon Valley, and they have been complaining of their data centers, or whichever data center they are working with. There is a shortage of silver in manufacturing or doing those chips. In fact, Nvidia is making a lot of money out of that, because Nvidia has now is in the process of tying up with some mines. Samsung has tied up with a mine in Latin America recently. So overall, I think silver is looking a bit of a tough commodity for me. So I would like to you to change the focus slightly towards gold. Gold is more solid, more robust, more, I would say reliable from that point of view. And it may have grown about 65, 70% in this year, not 170%. So anything which rises too fast also exposes you to that risk. There is always a risk of correction and crash coming down. And I think gold looks more solid to me for long term. So investors, although you must consult your investment advisor or financial advisor, anybody who's watching us talk here, but then I think gold for me looks like a more solid investment, and the chances of a deep correction in gold, Devika, are very, very minimal. It may be growing slowly, but it's very steady, and you're going to see long-term growth of gold, because gold is being stocked by the central banks. And I think gold standard seems to be coming back. In 97, prior to 1971, Richard Nixon was the president. He abolished gold standard when the currencies were backed by gold. I think we are in for those times again, maybe in the near future, with this de-dollarization and dollar losing its dadagiri, dollar losing its rutba, or dollar losing its dabdaba, whatever you want to call it. I think that dollar supremacy, once it ends, you will find gold coming to the fore, and gold is in very, very limited quantity, like silver. So I think the investors need to be cautious, and they can probably dilute their portfolios by way of gold. If you're only and only looking at silver, that's the piece of advice for the viewers who are watching us, Devika.
All right, Mr. Damani, I want your perspective on this as well. What are your thoughts?
Concur with what Dr. Kohli has said, that silver has been very volatile, and very quickly it's run up too fast, too quickly. That's not a problem, but that typically is a problem when you are living in a FOMO kind of an environment, and market seems to be kind of pushing you towards these assets where it's not a demand side pull, but it's a supply side story which is playing on at this point in time. Okay. So once that supply side story starts to ease out, maybe by end of 2026 or start of 2024, 27, we don't know. But whenever that starts to happen, silver prices might start to cool off in a very significantly sharp manner, which will not go down well for retail investors. And historically, we've seen that retail are the ones who jump in at the last moment and generally have the last bit of the piece. So we don't want investor to get disappointed trapped at this point in time. Maybe it goes on to say give you about 20% more returns, but that's going to be with a volatile movement. What we've seen in yesterday's trading session or probably in today's trading session. I would largely place my money on gold at this point in time, where, as he rightly pointed, the theme has been de-dollarization. It's more of central bank backed buying scheme. It is more to do with what President Trump is going to do in the next 6-12 months, how sharply and how quickly the inflation is going to rebound, and the change of guards at the Fed is going to be one key factor to look at. So I think the market is tilting more from silver now towards gold, and the influencers can continue to influence people by pushing more of silver. But the real money or the stable money which doesn't bother you much is going to be coming in from gold. So we continue to maintain a positive chance towards $5,050, $5,100 the next 12 months. That's a clear 12-13% upside from current levels as well.
All right, Professor Aman Agarwal, quickly your thoughts before we wrap this up, sir.
I think the investors or users need to be careful of both gold and silver. We already have discoveries in the Nordic Europe going on where they have found a tree with which they can build gold. So that has already been discovered a couple of weeks back and it is already in news. They're actually wanting to produce mega quantities of gold. Also, gold has been in sea waters for centuries now, and it is a known scientific fact that gold is there. So I would not be too bullish on gold either because we have seen the gold crash in the world after the World War, immediately after that, and that's where Europe lost the lust of gold because the Europeans used to wear gold like we do as well, but they lost the lust of gold after the World War. So we should not be too high on these two. Yes, the central bank is buying and they will continue to buy. RBI has bought more gold this particular year than and even last year as compared to the last 10 years. So you can imagine the kind of gold reserves being created, but our gold reserves, the total form of reserves, is a very small, minuscule amount. So we have a huge way to go even if RBI wants to hold gold reserves. Gold standards are still a question which is there given the crypto or the digit CBDC is coming in place. So there will be a lot of other metals and other things which are coming in. I would say the prices will correct themselves. There would be a expected fall tomorrow and further going in March onwards. I don't expect too much of a rise going forward in these two metals for now. The profit bookings largely, even by the retail owners, have been done. Some will burn their hands as always happens.
Okay, all right. On that note, I have run out of time, but thank you to all of our panelists for joining us. And I'm sure in 2026, I'll be having a conversation on copper as well with all of you. Getting a smile there from everyone. Everyone knows what I'm talking about. But with that, viewers, a very short break.